Hi everybody, this is Lara with your weekly video for gold for the trading week ending Friday 4th of March. Upward movement continued. I'd expected a pullback or consolidation. That didn't happen. Prices moved higher. There's some weakness though now in upward movement. I'm still expecting that consolidation or pullback to turn up sooner rather than later, maybe to test support at the upper edge of the triangle. If it doesn't get that low, it may end about 1854, and after that the upward trend should resume. Elliott Wave analysis first, classic analysis last, and it's time to step back and take another look at monthly charts now that February is complete. So this is the month for February, and it's complete, and now we're into March. At the monthly chart level, here's a really important high, December 2011, a big bear market for gold. This preferred main bearish wave count sees this as a double zigzag for supercycle A, within a huge flat correction for grand supercycle 4. Both my wave counts at the monthly chart level have grand supercycle wave 3 ending in December 2011, and this wave count sees grand supercycle 4 continuing, A, B, C to unfold lower. B moves beyond the start of A, and they both subdivide as three wave structures, double zigzags. B is a 1.17 length of A. This is within the normal range of 1 to 1.38 times the length of A. B waves of expanded flats do move beyond the start of A, and expanded flat corrections, particularly in B wave positions, but also fourth wave positions, are really quite common Elliott wave corrective structures. Supercycle B subdivides perfectly as a double zigzag, W, X, Y. X subdivides as a double combination. Y is a lot longer than W. They're not even in length. They don't have to be. They are just most commonly even in length. All of the subdivisions of this wave count at all time frames have a really good fit, and that gives it a higher probability than the bullish wave count, which has several problems now. If supercycle B is over here, then that's where supercycle C begins, and a common Fibonacci ratio for wave C within an expanded flat is for C to equal 1.618 the length of A. That would be achieved at 657. We should expect C, if this is the correct wave count, C should make at least a slight new low below the end of A at 1046 to avoid a truncation and a very rare running flat. Supercycle C may only subdivide as a 5-wave motive structure, either an impulse or an ending diagonal. Within it, cycle 1 may be complete. We may now be looking for the end of 2 and then 3, 4, 5. Let's take a look at the weekly chart. This high here is this point here. From this high to this low, this movement subdivides as a 5-wave motive structure. It's a leading expanding diagonal. That's important because if supercycle C is going to subdivide as a diagonal, then all of its subwaves may only subdivide as zigzags. And if I have the degree of labeling right, and this is cycle wave 1 over at this low, it's not a zigzag, it's a 5-wave motive structure. And that tells us, if the degree of labeling is correct, that supercycle C may only subdivide as an impulse. That's good because that's an relatively easier Elliott wave structure to analyse, and it's the most common structure for a C wave. Following a leading expanding diagonal in a first wave position, we would expect the second wave correction to follow to be very deep. That's normal behaviour. The target at 2018 would see cycle 2 a very deep correction following normal behaviour. 2 may not move beyond the start of 1 above 2070.78. 2 is subdividing as a zigzag. A, B, C. A is a 5-wave impulse. B, a regular contracting triangle. C may only subdivide as an impulse. 1 may be over. 2 may continue sideways or lower for another week or so, maybe 2 or 3 or 4. It can't move beyond the start of 1, below 1780.75. When 2 is complete, then 3 must move beyond the end of 1. 4 must unfold and remain above wave 1 price territory, and then 5 should move beyond the end of 3 to avoid a truncation. If my target here is wrong, it's not going to be high enough. It now looks like primary C may need to end higher in order for its structure to complete as a 5-wave impulse. Let's take a look at how the structure is beginning from the end of B, the triangle down here, and here's the start of C. 1, 2 may continue, and then 3, 4, 5. 2 may be unfolding as a regular flat, A, B, C, with C to move a little below the end of A. It may reach down to 1853.96, the 0.618 Fibonacci ratio of 1. In the short term though, minor wave B absolutely certainly could move higher and could make a new high beyond the start of A, as in an expanded flat. They're actually pretty common structures. Let's see if we can see one at the weekly chart level, or the monthly chart level. There really should be one here. Here's an expanded flat, A, B, C. B moves beyond the start of A, C moves beyond the end of A. They're very common, particularly in B wave positions. They can also unfold in a second wave position. This could be a regular flat. If B ends here and C moves below the end of A, then it would be a regular flat. Minor 2 could also be moving sideways as a combination, which would mean it would be expected to find support about the same level as A and just be a sideways movement for a few more sessions, maybe a couple of weeks or so. And sorry, not minor 2, intermediate 2. Intermediate 2 may not move beyond the start of 1, below 1780.75. At the monthly chart level, this is a bullish wave count. All the subdivisions in this double zigzag are exactly the same as the bearish wave count, but here I've just moved it all up 1 degree. It's possible that Grand Supercycle 4 as a double zigzag could have been over down here in December 2015, but if it's over here, it's lasted only 4.25 years. You'd expect a wave at Grand Supercycle degree to last at least a decade and possibly quite a bit longer. This seems very, very brief. It's possible, because bearish moves for pretty much all markets can be a lot more brief than the bullish moves that they corrected, due to, for many markets, having an inherent bullish bias. But this really is pushing it. This is very brief, reduces the probability of this wave count. If Grand Supercycle 4 is over there, then Grand Supercycle 5 is underway, with Supercycle 1 an incomplete impulse. 1, 2, 3, 4, 5. Within here we have cycle wave 2 unfolding as a regular flat, expanded flat for primary W, X, expanded flat for primary Y. All the subdivisions are okay, except you have to ignore a very obvious triangle, which looks like a triangle on the daily chart in here. Apart from that, the problem here is double flats, in my experience and research, are actually very rare structures. Again, the probability of this wave count is reduced. It has quite a few problems that are starting to add up. If 2 is over there, then 3 could be over here, 4 could be over here as a triple zigzag. It's really not too much of a problem that 4 is more brief than 2. That's common for gold and commodities and cryptocurrencies, for their fourth waves to be more brief than their counterpart second waves, and there is alternation between a double flat and a triple zigzag. Within 5, no second wave correction may move beyond its start below 1677.64. Draw an Elliott channel from 1 to 3 with a copy on 2. Any deeper pullbacks along the way up may find support at the lower edge of this channel if this is the correct wave count. If this channel is breached at the monthly chart level, I might discard this wave count prior to invalidation. This high here, the end of cycle 3, is this point here. Here's the triple zigzag of cycle 4 and cycle 5 beginning. It may only subdivide as a 5-wave structure, which will be labelled at primary degree 1, 2, 3, 4, 5. Primary wave 3, the target is for it to reach 1.618, the length of primary 1, at 2078. Primary 3 may only subdivide as an impulse. At intermediate degree, that will be labelled 1, 2, 3, 4, 5. Elliott wave is fractal, like a series of Russian dolls nested into each other. Minor, a smaller Russian doll. Intermediate, the next level up. Primary, the next level up. cycle the next level up. Within intermediate 3, it may only subdivide as an impulse at minor degree 1, 2, 3, 4, 5. Let's take a look at the daily chart level where this low of minor 2 is this point down here. Now minor 3 may only subdivide as an impulse. 1, 2, 3, 4, 5 may be almost complete. When minor 3 is complete, minor 4 may not move into minor 1 price territory below 1875.09. Minute 3 subdivides perfectly as an impulse, minuet 1, 2, 3, 4, 5, and minuet 3 an impulse, subminuet 1, 2, 3, 4, 5. Third waves within third waves, and the middle of the third wave may have passed here. Minute 5 needs to subdivide as an impulse, 1, 2, 3, 4, 5. It could also be a diagonal, but most likely an impulse. The target for primary 3 to reach 1.618, the length of 1 at 2078. The target for cycle 5 to reach 1.618, the length of cycle 1 at 2094. Okay, classic analysis now for gold at the end of the month. We've got a monthly chart to have a look at the candle for February. Now it's complete. And the candle for February has a bearish long upper wick and it has a decline in volume. A little bit bearish, but we do have a break above resistance. Well, not at the monthly chart level, but at the daily chart level. Prices closed above resistance at 1910 with support from volume. So there was a consolidation and there's been a very important upward breakout. If we do see downward movement, I would expect good support at 1910. Looking out for next resistance above at 2100. On balance, volume constrained, no signal this month. ADX again indicating an upward trend. It is extreme, but not very extreme. It was it wasn't very extreme back here. It wasn't above 45, but it was above both DX lines. It's done that again. And so the trend could certainly continue for a few more months, but at this stage, it's starting to run into extreme territory. ATR declining as price moves sideways. That's normal. RSI in neutral territory, reached overbought here. Look at how long RSI can reach overbought, and quite reasonably overbought, before we see a big trend change. And stochastics in neutral territory. At the weekly chart level, here's that symmetrical triangle. And I've given you that classic analysis target from it, which was 2142. That would see the Elliott Wave analysis invalidated if that target's reached, what the bearish wave count would be anyway, which would leave only the bullish wave count. Not there yet though. On balance volume last week, well, the last signal it gave, a break above weak resistance. Now it's tested support, so this line has a little technical significance. This is a little bullish signal. RSI neutral territory, plenty of room to, a reasonable bit of room for it to go before it reaches overbought and gets overbought enough to be in dangerous territory. ADX giving a very bullish signal. It's telling us that there is an upward trend in an early stage. Stochastics entering overbought. ATR showing a little increase after a breakout from that triangle. On the Elliott Wave chart, I've extended the triangle trend lines out and the point in time at which they cross over sometimes, not always, sometimes sees a trend change. We'll look out for that in coming weeks. At the daily chart level, this is not either, this could have been a blow-off top. It could be followed by some consolidation. We did see upward movement with support from volume and heavy volume on this overall upward session. Now, price is moving higher, but with red candlesticks in here, it's not a very clear, strong upward movement, and it's coming with some decline in volume. Although for Friday's session here, there was an increase in volume beyond Thursday. So for the very short term, this is bullish, which is why I say we could be seeing an expanded flat for that main Elliott Wave count. That B wave could move higher, could make a new price extreme beyond the start of the A wave. We could see a new high above this point before we then see a downward pullback. Look out for support about 1880, below that 1850. No signal from on balance volume here. At the daily chart level, ADX is extreme, getting pretty close to very extreme at this time frame. That would be if the ADX line reaches above 45. RSI back in neutral territory, but it can certainly reach overbought and remain there for a while longer. This trend is not yet in the territory where it's extreme enough to be very confident of an upcoming consolidation or pullback, but it's pretty close. Stochastics, in neutral territory. ATR increased after the breakout from the triangle. That was bullish. We can have confidence in that breakout. Just now, trying to look out for the timing of the first decent consolidation or pullback. Is it going to pull back to the upper edge of the triangle trend line? In 59% of cases, after an upward breakout from a symmetrical triangle, that's what happens. I don't think it's going to get that low, but I am looking for a consolidation or pullback sooner rather than later before the trend resumes. That's all from me this week with your gold analysis, and I hope all of our members are looking forward to a most fabulous weekend.